Hi friends, welcome to my channel. Let's start with the first chapter, Introduction to Stock Market. So before going to the stock market, so we'll go through why we need to do investment and all. So first, even here, why we need to do investment. So in a simple way to invest to secure your future. Okay. So after that, what are the types of investment we can do? So you can see here the picture here. The types of investment we have bonds, equity stock, mutual fund, real estate, and commodity. So what are the how much profit we'll get if we invest in others? So even your fixed income instruments. So maybe these are mutual funds, LIC, like that. So if you invest in these mutual funds, so we'll get 8 to 9% return at n yearly. So if you, for example, if you invest 1 lakh at the end of year, you'll get 8% return. Means 8,000 you will get per the 1 lakh. So in other way, if you go for the real estate, so real estate, to invest in real estate you need huge amount. If you have that much amount of money, then it's better to do real estate. And others also commodity. What are this commodity means? Do investment in gold, silver, diamond, like that. So in other way, this bond also there. So what is this bond? The bond means just will give the money to others with a rate of some fixed rate of interest. So that is also a way of investment. And what is this equity? So in this equity means we are buying shares of publicly listed companies. So here the rate of return investment is 15 to 20%. So here we'll get 15 to 20% return. So when you compare others types of investment, is equity is better, but it is somewhat risk also. So based on your risk, you can invest all these things. Okay. Okay. So after that, we'll go through the regulator. So who is controlling this stock market and all, and to buy any stocks, what is the procedure, what is required. So these things I will tell you in these regulators. Okay. Stock market is a place where we can do buying and selling in equities. So just like the way we go to supermarket to shop for our daily needs, similarly we go to the stock market to shop for equity investment. That's it. Simple way. Okay. And there are two main stock exchanges in India that make up the stock markets. Similar like in DMart, Vishal Mart. So we have many markets like to buy our daily needs. Like that in the stocks we have two markets. One is Bombay Stock Exchange in BSC and the National Stock Exchange NSE. So in BSC we have 5,000 plus companies. In the National Stock Exchange we have 15,000 plus companies are listed here. So what are these company listed means I have already told you here. So we can buy the shares of publicly listed company. So these publicly listed companies are listed in BSE and NSE. So whichever company is listed in BSE NSE, those shares only we can buy and sell. So you can see the picture here. So BSE NSE. So the market will start at 9:15 a.m. morning. It will end at 3:30. So then we'll next go for the stock market exists electronically and can be accessed through a stockbroker like Zerodha and Upstock. So similarly like Flipkart and OLX to buy or sell any product. So as I told you, so to buy any daily needs, we'll go directly to DMart or Vishal Mart, otherwise nearby supermarket like that. So like that we can't go to Bombay Stock Exchange directly or National Stock Exchange directly to buy our shares of any company. So they have done digital format. So we need to have some account, DMAT account. So maybe you can have zero, the upstock, 5 paisa like that. So many DMAT accounts are there. So you can have one. You should have one DMAT account. So if you have one DMAT account, then in the DMAT account you can buy any shares through the BSE or NSE. And we'll go in the next. There are many different kind of market participants operating in the stock market. What are those? So the domestic retail participant. These are the people like you and me in the market. And DII, domestic institution investors. There are large corporate entities based on India. And these foreign institutional investors, non-Indian corporate entities. Okay. So you can see figure here. the FII, foreign Indian institutional investor, and DII, domestic institutional investor, and the retail investors like you and me. Okay, and I told you who is controlling this all stock market is SEBI, the Security and Exchange Board of India, is the regulator of the stock market in India. So this will do. Okay, so these will do all the rules and regulation for the stock market. And most important, you need to remember that SEBI is aware of what you are doing in the stock market. If you do any fraud and all, so they will do inquiry on you. Okay. If anyone is new to this stock, so I suggest don't invest by seeing my this one video. If already some people are investing but they don't know these basic things also, for them I will give a small tips on this. As I told you, the types of investors here, the domestic retail participant and DII and FII. So this DII and FII are the, they will buy in large quantity. So they will buy, they will invest in any company in crores. So here you can see to see any company shareholders, so we have so many websites here. So I prefer this one, ticker phonology. So if you go to the ticker phonology and you can type your company name on which you are invested. So for example, I go to TCS, Tata Consultancy Service. So in the above you can see charts, ratio and shareholders. In the shareholding you can see the pattern. So promoter means the company owner. So they are holding 72.3% of the total equity. So in that, FII is holding 12.94%, DII is holding 9.31%, and public like you and me, just they are holding 5.45%. So, and I prefer is, if you are investing in a company, the promoter percentage should be high, more than 50, around at least more than 40 should be there, and FII DI should be there. Okay, you can, for the safer side, you can invest where you can see promoter is more than 40% and FIDA is also there. And you can see here in December 2021 the promoters was 72.19 percentage, and after that now you can compare, the promoter has brought again their shares. So this is a good sign, you can invest like that. And you can see the pledge means the loan on this promo, so you can get loan on your equity also, equity shares. So the promoter is holding 72.19 percentage of equity. In that, he kept 0.47 percentage on loan, means he kept this on bank and he took loan on that. So these are somewhat risky. So zero point 0.1 or 2, 1 or 2% is okay. If it is too high, then we should avoid those companies. Okay, for example, I will tell other company where it is uh, Prakash. So Prakash Steel you can see here. This is one steel company. You can see shareholder patterns here. You can see here FI is 0%, means FI not invested in this company, and DA also just invested 0.15%, and even promoters also very less, 33%, and only public is more. So please avoid this kind of company. If some people are already started invested without knowing this, so please see your shareholders pattern, the in ticker phonology. Thank you, friends.